Short-term medical plans have been in and out of the spotlight for years, loved by some, criticized by others, and constantly reshaped by changing laws. But right now, they could be stepping back into the limelight in a big way. Why? Because marketplace premiums are set to increase by a significant amount, which could make short-term medical plans the alternative that could save you thousands of dollars. So today we'll be discussing the pros and cons as well as recent policy changes that could make 2026 a very big year for health insurance. Stay tuned. Now, short-term medical plans are just that. They're just what the name implies. Usually they are meant to be used for a short term, although historically we have seen them used for much longer periods of time, and we will discuss that momentarily. Short-term plans are offered by private insurance carriers, and they are not beholden to the same rules as ACA marketplace plans. That means that there could be certain areas of coverage that you might need that you might not have. For example, prescription drugs, maternity care, etc. Again, more on that in just a minute. But because short-term medical plans are not required to offer all of these benefits, and because they do require medical underwriting, they can be significantly less expensive than a marketplace plan, especially if you're ineligible for one of those premium tax credits. So let's talk about the sort of roller coaster of the term limits that short-term medical plans have experienced. Now, one of the most confusing aspects of short-term medical plans is how long you're allowed to keep them, because it keeps changing. Now, prior to 2017, short-term medical plans were usually around 12 months. 2018, it was expanded up to 3 years. 2023, cut back to 3 months. And now here we are again with our big news, which is that short-term medical plans are now available again for a period of up to 3 years. This really is huge news because of those increasing marketplace premiums. This could make short-term medical plans once again a much more affordable and stable alternative to marketplace plans. So first, let's discuss some of the benefits of short-term medical plans. Lower premiums. In many cases, short-term medical plans can be 40 to 60% less expensive than a marketplace plan if you're ineligible for one of those premium subsidies. Flexible enrollment. You can sign up at any time. There's no specific enrollment period. So if you've missed your marketplace enrollment, then this is a great option for you. Customizable coverage. Because short-term medical plans are offered by private carriers, there are so many options available, and you can really pick and choose which benefits are best suited for your needs. Fast approval. You can often be approved in less than 24 hours. And wide provider choice. This is huge. Most short-term medical plans offer nationwide PPO coverage, which will give you extraordinary flexibility, and it's not really something that's readily available on the marketplace. So for healthy individuals, these plans can offer an affordable solution at a fraction of the cost. Now let's talk about the downsides, because it's not all sunshine and rainbows when it comes to short-term medical plans. No pre-existing coverage. If you have pre-existing conditions, then it's unlikely that those will be covered by your new plans. Now, sometimes with a multi-year plan, and now that we have 3-year term plans, this is going to be more common. Sometimes, or actually oftentimes, you won't have coverage in the first year, but you will likely have coverage for those more basic pre-existing conditions in the latter years of the plan. Benefit caps. There could actually be a maximum payout. So if you have major medical needs and you wind up in the hospital for an extended stay, then it's possible that your short-term medical plan might not cover the entirety of your bill. So this is something that you definitely want to look into before signing up for a short-term medical plan. No essential health benefits guarantee. Now, all marketplace plans must offer at least the 10 essential benefits. These include things like prescription drug coverage, maternity care, newborn care, etc. Many of these benefits are not covered by short-term medical plans, and they're certainly not guaranteed. Not available or renewable in all states. Even though these rules have changed federally, states can still impose their own rules when it comes to short-term medical plans. No subsidies. Unlike ACA plans, there is no financial assistance based on your income. There's no subsidy provided by the government. The only real way that you can save extra money on a short-term medical plan is by being healthy, because there is medical underwriting. And because of that, you could be charged more or possibly even denied if you don't meet certain criteria. So how do short-term medical plans compare to marketplace plans? With a marketplace plan, you are guaranteed coverage, There's no exclusions for pre-existing conditions, and there's those full 10 essential benefits as well as those subsidies that are available. But remember, without those subsidies, marketplace plans can be extremely cost prohibitive. So timing here is really crucial. At the end of 2025, those expanded premium subsidies that were available under the Inflation Reduction Act and American Rescue Plan Act are set to expire. And unless Congress takes action, and it's likely that they won't, then those expanded premium tax credits will expire. This means that millions of Americans who are eligible for larger premium tax credits or just eligible for a premium tax credit now for the first time may suddenly find themselves ineligible or with a much smaller premium tax credit. That could make a marketplace plan suddenly unaffordable for these individuals. In this case, a short-term medical plan might be a great alternative. Again, these premium tax credits that have been expanded are set to expire at the end of 2025. We have a video that goes more in depth into those expected changes for 2026, and I will put that at the end of the video. Of course, if you have questions about your marketplace insurance or short-term medical plan, you can reach us in the comments below or at the number on the screen. We are licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. Now, we have seen more changes really than ever before, possibly, regarding health insurance in the last couple of months. So please make sure to subscribe to stay up to date. And of course, please make sure to like this video so we can get this information out there. All right, let's get back to it. Now, as I said, we do have a video that goes more in depth, but I just want to touch upon some of those 2026 changes and the reasoning behind them. So first, as I already mentioned, those expanded premium tax credits are set to expire at the end of 2025. And this means that millions of Americans could see their premiums jump by hundreds of dollars, possibly over $1,000 per month. KFF estimates that it'll be somewhere around a 75% increase and that customers could possibly see their monthly premiums double. Now, of course, that's not the only reason, but it is a large contributing factor. Of course, medical costs in general are on the rise. Insurers cite higher hospital and physician prices, more outpatient and pharmacy utilization, and specialty drug costs. These feed into gross premiums before subsidies are applied. There have also been significant changes to Medicaid, which will affect the overall marketplace landscape. Many people lost Medicaid during the post-pandemic redeterminations. Some moved to employer plans or marketplaces, but many became uninsured. Analysts reviewing filings note that the unwinding can nudge premiums 1% or 2% in either direction, depending upon who moves, healthier or sicker. But there are additional administrative costs either way. There are additional cyclical factors as well, meaning things that will make the situation worse and worse and worse and worse as they feed upon each other. For example, lower or limited enrollment. Now, as prices go up, people that really need health insurance for major medical concerns will probably find a way to stay insured. Younger, healthier people who are looking at tightening their budget may determine that they're going to forego health insurance this year. That means that the population who are enrolled in health insurance is largely sicker. That means that there is no healthier population to offset some of those costs and bear that financial burden. So what happens? Well, because the insurers now have to pay out a larger portion of medical bills, they have to recoup this cost somehow. And how do they do it? By increasing those premiums yet again. And the circle goes on and on and on and on. Similarly, the One Big Beautiful Bill has introduced more regulations involved in signing up for marketplace plans, which may also shrink the pool, which could lead to higher monthly premiums as well. Now, some states are already previewing higher base rates. For example, California's exchange has signaled a 10% average increase for 2026 and warns that without federal help, net premiums for 1.7 million Californians could spike by 66% on average. That's the effect of those higher base rates plus losing those subsidies. Two main things are affecting your bill: the actual premium itself plus the discount available. So we're expecting premiums themselves to increase as the availability and the size of those premium discounts is shrinking drastically. So in general, you can expect to see your premiums raised by quite a bit. So a short-term medical plan could be a great option, but they are not for everyone. For example, if you have serious or major medical concerns and you feel that you might not be able to pass medical underwriting, then a short-term medical plan might not be ideal for you. Additionally, if you are looking to start a family or if you have younger children, then a short-term medical plan probably isn't ideal. Short-term medical plans won't cover pregnancy, and with little kids, there are often just so many doctor's visits that a short-term medical plan probably isn't the best bet. However, if you are younger and healthier, or if you're someone who is ineligible for a premium tax credit, or if you're someone who really needs that flexibility offered by nationwide PPO coverage, then a short-term medical plan might be a great option. So the key takeaway here, short-term medical plans are back in the game, and for some they might be the best financial move in 2026. But they're not a one-size-fits-all solution. Understand the trade-offs, know your health needs, and compare carefully. Because there are so many options for a short-term medical plan, it's possibly more important than ever that you work with a broker. So if you need our assistance, you can reach us in the comments below or at the number on the screen. As I mentioned, we are licensed health insurance brokers. We're licensed nationwide, and there's no charge for our services. Now, if you'd like to learn more from that video that I mentioned earlier in today's video, check out this video over here about those marketplace plan changes in 2026, or you can learn all about marketplace plans in general with our marketplace plan playlist. As always, please make sure to like and subscribe, and we'll see you next time.